Okay, we're back in session. You can continue with the witness.
All right, Mr. Grace, we were about to look at the Board of Review submissions for each of these three parishes.
Yes. Basically, the board of review starts on 224. This is the one for Caldwell. The LTC value plus P&A doing the Cane Hill compressor came in around 118 million. We're requesting the value 47.3. The information that was provided was the same information we provided to them during the open book letter. That's for Caldwell. You can go each one.
So that was Exhibit 7 for Caldwell Parish. Exhibit 8,
Exhibit 8 is the one for Franklin. The value, the personal property, 53.9. The personal property our requested value is 27.5. And the final one for Jackson Parish, 123.5 was the LTC schedule. The requested value is 66.6.
and does that consolidate all of the accounts within each parish?
That's correct.
Do you recall offhand how many different accounts there are in Caldwell Parish?
I don't recall offhand. I can look it up though.
No, that's fine.
You actually do it based on the docket numbers. There are three.
There should be about, I think, 3, right?
You know,
Mr. Eddington helpfully pointed out that the number of docket numbers indicates a different number of accounts.
So that's 4, 3.
3 or 4?
That's 4.
4 for Caldwell.
Yeah, 4 for Caldwell. Well, that's 3 though.
4, so 8 for, oh no, so each year, so 2 for
Oh.
Caldwell and then 2 in 22.
Okay, 2 for Caldwell, 4 for Franklin, add 4 for Jackson. Right?
You could
I-
not have thought that was so hard.
I find a way to make things difficult.
And what were the Board of Review decisions for each of those appeals?
They were all to affirm the LTC schedules or the schedule or the values provided by the parish assessor.
Okay, and could you look at Exhibit 10? I believe that's the appeal forms to the Louisiana Tax Commission.
Yes, ma'am.
And does that reflect the same assessor values and your same appeal requested values?
That's correct.
And is that for all parishes for 2022?
Yes, ma'am.
And then what did you do in December when it came time to pay the taxes for these parishes for 2022?
Taxes were, we basically paid them with a letter basically saying this is the value in dispute. These are the taxes paid not in dispute. So 2 individual checks were cut. In addition, we mailed or emailed the assessors the information as well.
And are the payment under protest letters attached as Exhibit 11?
That is correct.
And as far as you know, are the protested amounts being held in escrow by each of the parishes?
As far as I know.
All right, let's go to 2023. That starts with the Caldwell Exhibit number 13. Franklin is 14 and Jackson is 15.
Oh, I'm sorry. I have one more.
So
It's 12, 13, and 14.
So in 2023, we filed the returns in 2023. When we originally filed the returns, I'll be straightforward, there was a problem in our office. We had a server that went down. When we filed the returns, they had the 2022 LTC values in there. We did correct that the next following week, following a phone call from an assessor basically saying these schedules are incorrect. We emailed them immediately, contacted them and told them this is the problem. We apologize for any inconvenience, but the descriptions of the assets, the pipe, the materials, all of that was incorrect. It was just the LTC schedule, the RCN was incorrect.
And did any of the assessors indicate that they had a problem with that?
They did not. So if we run down the 2023 return, it's basically the same information we provide. So This one, what we do is just basically show the math on the front and provide the return.
So can you walk through the letter like you did for 2022?
The letter is a little bit more abbreviated. We basically went through what we're providing to them is the calculated value from the LTC divided by the fair market value from Arthur Financial Services. So in this case, it was 281 divided by the basically almost 545 million to derive the 48%. Then we emailed them back and saying that was incorrect. The LTC RCNLD ended up arriving at 616 million divided, and 281 was the Arthur Financials. So we're requesting 54. So it went up from 48 to 54% because the LTC schedules from year over year, specifically on the larger diameter pipe, increased quite a bit.
And what's the page number for that?
This one's on page 602. This is just an email. On page 600 is the actual letter that was mailed out on April 5th. Again, we do apologize that happened, but it happens.
All right, please continue.
So, after we emailed the revised, we come to the open book letter. Good. So,
So Exhibit 17.
there we go. I'm getting there. 17. August of 17, we emailed a letter basically to all the jurisdictions yet again. 2023, basically stipulating accordance with Louisiana 1301, the guidelines for ascertaining fair market value of pipelines, gives the definitions, and tax code title 61. So then what we do is basically provide the same information by diameter and then the ancillary equipment. So if we look at page 752, it basically shows you all the mileages, the RCNLD from the LTC's depreciation, and then how that calculates to your RCNLD. We take the fair market value from Arthur Financial Services less the working capital. In this case, it came up to 281, divided that by your LTC of 616 to derive an economic obsolescence factor. In this case, it ended up being the 54.4. This kind of goes back into the history that we've discussed, that this gas is moving from west to east. When we started building the system out in 2009 with the expansion. And then we talked briefly about the impairment study that was done by PricewaterhouseCoopers. And then it gives a financial history of how this system is operating. Obviously is not operating at 100%. Mr. Fraser, you did ask yesterday late a substitute question for why did it change from Grant Thornton audited financials to basically internal financials? That is because at that point in time, we had a joint venture with the Linda partners, and they required us to have audited financials. So that was done until that sale. Once that sale occurred in April of 2018, once that sale happened, they ended up not having to do an audited financial just for that one entity. So now what we're doing is just internal reports. It's common practice in industry. Is that sufficient, sir?
That reminds me, Mr. Fraser had another question asking about what's to the east?
Yes. To the east,
Yeah, my question was, I was curious about other pipelines that might run off of this pipeline. If there's some going south, northeast, and which is going to get back to another question. We talk about all this push through. I'm very curious, when y'all talking about pushing through, hey, some of us pushing through the northeast to the south. Is any of that pipeline being used to push through?
Yes,
These are just questions that.
no, this is fantastic. We have no problems at all. So the way the system was built, we're pushing gas from the west to the east. When it hits, well, with one caveat, when it hits out in Caldwell Parish, you do see the green dots. I would go over there, but I got to carry the microphone. It's going to be a mess for me. I'll trip over myself or Mr. Addington. So what we're looking at, you see the green dots, those are takeaways. So Texas Gas, Trunk Line, A&R, and Columbia, that's who we're transporting those gas to. So those pipeline companies will transport gas where the need is, or where they're going to get the most money per molecule, right? So when we originally built it, everything was pushing up to the northeast to the load centers up there. So the pipelines that are listed here and these companies have the ability to go south to north to south. They can move the gas both ways. And that's why you're actually seeing that gas coming now from the Marcellus going through Caldwell Parish or Franklin or one of them, and then actually getting down to the coast. So what we're doing and what we're having to do to get our gas to market at the highest dollar, we're moving that gas from the center to the east and then down and hitting those big interstates. Does that answer your question, sir? We do have two other places that we do transport gas to. One's going up north through through the Panda line. If you'll see that lone stick up there at the very top, what was that, Claiborne Parish? You see where that connects? That's pushing that gas up to a very large natural gas fired plant in Arkansas. So if it's moving gas or if it's turned on, especially during summertime or the winter, they're gonna need gas. And to operate that power plant, that's where we get the gas. So we're gonna push gas up there. We also push gas to Louisiana Tech. So those are the delivery points where we ship that gas to. I got a little. Oh, here we go. Look at there. Thank you. So there's that piece of pipe right there goes up to Arkansas. It interconnects with another pipeline system that goes up. That's Louisiana Tech. And then these are your big interstates. So they will go all the way up to the northeast to transport that gas.
Just out of curiosity, how many pipelines run off of that to the northeast and stuff?
According to this, you got to interconnect with Texas Gas, one with Trunk Line, well, two with Trunk Line, two with A&R, and two with Columbia. And I think Tennessee's in there too. So company-wise, you got 1, 2, 3, 4, 5 companies that have that interconnects, and you can see their names right in there. I'm getting pretty good with this. But these are our transports. You see both names on here. So basically it's an interconnect between that 30-inch line and the 42-inch line. That's why you see Trunk Line, I know it's hard to see, but right there, that's on the top and the bottom, because it interconnects to the 30 and interconnects to the 42.
And so I take it there is lines running south off that side too?
Not operated by rigs.
Are the lines or the pipelines connected to the Riggs pipeline running south off that?
They run north-south, yes, sir. So they do go down to the coast.
So there are lines off y'all's lines running south?
Not operated by, yes, sir.
Or yeah,
Yes, sir.
okay.
Yes.
Just out of curiosity, when they push through your segment of pipeline, how does that come into the income? Do y'all contract that? Or how do y'all value that? Because obviously, I'm sorry, I'm just, so it would seem to me there's certain segments of the pipeline that might generate more money if somebody's passing through your segment to transport their gas back and forth, maybe. Is that accurate? Would they use some of y'all's?
No, sir. That is strictly a delivery point. So what we do is we produce most of the gas here, and it's produced in this area here. Not a lot of wells out in here, but there are some. But anyways, this gas we push to here. They don't offload gas onto us. We offload gas to them. It's a one-way relationship. We don't we don't take any of their gas and ship it down our line because where do we go with it? So if we were to take that gas, we would have to connect back in here, and that wouldn't make a lot of sense because we don't have any interconnects down in here. It's all being pushed here. And then these companies like A&R that I mentioned that are big interstate, they're not offloading their gas. We're pushing it onto their system, and their system's pushing it north-south or north-south or south-north, whichever way you want to look at it. But when this was originally built, we're moving it to the north, and now they're moving it south. So our customers, what we're having to do on this system, since we don't have anything pushing, Administrator, do you mind I just don't want to hit you with the laser.
Oh.
I could care less about.
Oh, you could care less if it's a laser.
No, I said I could care less if you're in the way, but I just don't want to hit you. But, so if we're in here, we got to push it here to get the interconnects to go down. Perfect world society, and as stated by Martin before, if we were going to do this and rebuild this system, we would have this leg here pushing it directly down to the north-south. Because we want that gas. Where's all the money being made? It's all being made right now on the coast. It's all those LNGs. They're freezing it and sending it overseas.
So can I have a follow-up question? So when you built that extension going into,
Caldwell and Franklin's the
or
part.
the far right,
Yes.
at that point, there were pipelines running north, and that was a business intent to push the gas there to then get it transported by someone else going up to the East Coast, correct?
Correct.
And then over time, as the industry was changing, someone came along and could have connected to your distribution to then flow south,
Connected to our system. Yes.
to flow south,
Yes, sir.
right? But anything flowing from north to south wouldn't necessarily, because of the industry, come back from east to west, is what you're saying.
100%, because we do not have any takeaway capacity in here. We don't have a 42-inch line or anything to get that gas.
And your revenue is only generated by the natural gas flowing from west to east.
Correct. Our current contracts are written that way.
So along that line, once the gas goes to A&R or Columbia or one of the others, it's out of your control. You're not making any money off of it at that point.
That is correct.
All right, let's pick up where you were with the letter.
So as we walk down the letter, it kind of walks through that impairment study, basically writing down those assets in 2017, into year 17. We talked about the sale, how it was an arm's length transaction, how we bought 50% of the ownership of this pipeline for, in the neighborhood of 420 to 440 million. We walked through the guidelines, the LTC schedule, the rig system value based on the Arthur financial, and the economic obsolescence, and we dictated it out by year to kind of show you that this is not getting any better; it's getting worse. Then we talked about.
Can I interrupt you for 1 second? I noticed that in this letter, you direct the assessors to the pages in Ms. Cartwright's appraisals for the financials.
That is correct. The balance sheet's located in her appraisal at pages 20 to 21, and income statements on page 26.
Thank you. Please continue.
Then this goes into the LTC hearing. Yeah, this would have been in 2023, so this would have been post-hearing.
So tell us about what you were providing there.
So what we're providing is basically a synopsis of our hearing. Everybody here was in attendance for those hearings. This was for years 19, 20, and 21. During that time, we gave them everything from the YouTube channels to the times, et cetera, of what happened and transposed during that hearing or transpired during that hearing. We also gave them the decision from the LTC of what they valued those assets at.
And what was the decision for those years on appeal? Just high level, not numbers.
In high level, 2019 was denied because the Arthur Financial Services appraisal letter was submitted afterwards. At that point, for 2020, they did approve obsolescence. In 2021, they approved obsolescence.
So did the tax commission accept the valuations, in the valuation numbers in the 2020 and 2021 appraisals?
Yes, ma'am.
And what did the tax commission say about the best way to value a system like this?
Is to use a business enterprise value. It will basically generate the highest value possible based off the cash flows of the system.
All right, did you have any additional communications with the assessors in 2023?
In 2023, we did. We actually received an email from Mr. Elrod asking to see if we would like to meet and have a joint conference to discuss these issues. And we replied within, I think, 45 minutes or an hour, basically saying, yes, we'd love to. You just tell us when and where, and we will be there. And if you'd like anything else, we're happy to supply it. Later, we received an email saying that that would not be necessary. I believe it was a week later. And then after that point in time, we went straight to the open book letter and supplied them information.
All right, let's back up just a little bit. Did you ever hear from any of the assessors that they were confused as to the basis of your request for obsolescence?
There was no questions.
And no one expressed any confusion or requested any explanation about how you extrapolated the business enterprise value to the parish level?
There was no questions. The email from Mr. Elrod was on July 20th. It's on Exhibit 761. In talking with Glenn Kirkland of Jackson Parish, we thought we might be a good idea if we held a joint meeting to cover all the ground in one sitting. He has agreed to host a meeting in Jackson Parish with Christy Whittington of Caldwell, also attending if that suits you. Regarding who should attend the meeting, that would be up to you. Glenn said he would be out of the office Tuesday morning, but it goes on. If you're unable to schedule a meeting, if that suits everyone, then we're welcome in Winsboro anytime. I replied back accordingly, and then we received a letter saying this would have been August 4th. Hope this finds you well and you're doing well. In writing regarding the possibility of joint meeting that we discussed earlier. This is on page 760. After speaking with the other assessors, the general feeling seems to be that there's no need for another meeting at this point, given our ongoing litigation. Should you find yourself in Franklin Parish, and certainly be welcome in this office. All best, Rod Elrod.
Did you provide any sonorous information in that letter? In the first letter that you were just reading from?
No.
And why was that?
The sonorous information, one, it's a public information that anybody can pull. The data is there. Everything that you need is on their website. When we're looking at rigs as a system, we're using the appraisal and we're standing by the USPAP appraisal that was provided by Patricia Cartwright.
All right, let's go to the appraisal. That's Exhibit 18 in your exhibit books.
Yes, ma'am. 771.
And did you provide this to the assessors with the open book information?
Yes, ma'am.
And did you hear back from any of the assessors about it?
We did not.
And with respect to the prior questions about providing raw data to the assessors for the raw financial data to the assessors, did you do so?
We did not. It's all embedded in the financials of the Arthur Financials.
At this time, we'll proffer what will be taxpayers proffer number 2, and that's the financials that were originally filed in your exhibit book as number 19.
Again, commissioners, this is just a proffer. They are trying to reserve their rights on appeals. They're just trying to submit documentation. This is not a call for y'all to rule on or reconsider any evidence that has prior been determined on motion eliminate.
And again, just for completeness of the record, we would reassert our original objection that led to the exclusion of these documents. Any more proffers?
Yes, so we will proffer that exhibit, taxpayer proffer number 2. So after submitting the open roll correspondence, what happened with respect to the assessor's valuations? Okay, and the Board of Appeal, Board of Review submissions are attached as exhibits 21, 22, and 23. Page 860. And could you go through the numbers in the appeal form itself? Starting with exhibit 25.
Ending in 4700, value 58. 58 million, I don't think. 5
So this is turning out to be more tedious than I thought. Let's just refer to Exhibit 25 and the values for the different accounts that were, that the assessors had calculated, and your appeal values are set forth in Exhibit 25. So what were the Board of Review appeals? I'm sorry, results. And then again, what were the, do you have the forms for the appeals to Louisiana Tax Commission? And if you could turn now to the payment under protest letters. And as far as you know, are the amounts that you requested to be held in escrow still being held in escrow at the parish level? I have nothing further. Thank you.
Good morning, Mr. Grace. Yep, still morning. Brian Eddington, I represent the assessors for Caldwell, Franklin, and Jackson parishes. I have some prepared questions. Before I get into those, I want to cover a couple of things that came up in your testimony. First, taxpayer proffer 1 and taxpayer proffer 2. I don't want to talk about the contents, but can you tell me what these documents are? And these are the financial statements that would have been provided to Ms. Cartwright? And well, I guess just to cut to the chase, can you tell me why you try to submit them as an exhibit, they were stricken, now you're proffering? Can you explain to me why you believe these exhibits were important for the commission to have in the record? Wait, they requested additional information?
Source data for the income of folks is right here and about the.
Yeah, I want to be clear. These documents were not provided to the assessors, were they? And can you tell me your own words why they were not provided? Well, if they're included also financial services, I mean, this is the actual data that underlies the appraisal, correct? And this is the data that was provided to Ms. Cartwright, correct? And so my question simply, was there a reason you did not submit these 2 documents to the assessors? Okay, so you felt it did not need to be supplied is your final answer? Okay, I want to follow up on a question that Commissioner Frazier asked. Yesterday, Mr. Lee testified that the capacity of the system after removal of the compression in 2021 is now 1.2 MMBTU per day. And if I understood your testimony, you said that under Louisiana law, design capacity is what you look at. Did I get that right?
I did not say under Louisiana law. I specifically said under design capacity for that system. It was originally built out for 2.1.
Okay, but in 2022 and 2023, the functional capacity with the removal of the compression, again, those compression assets are no longer being assessed, is now 1.2 MMBTU per day, according to Mr. Lee's testimony, is it not?
That's correct.
And Mr. Lee also testified that using the correct capacity in 2022, the system was 95% utilized, correct?
Correct.
Okay.
It's as similar as you have a hotel and you basically say, we're gonna turn off the third floor. That's basically what they're doing, is they're not utilizing that entire asset.
Well, you said they're not using it, but in your analogy, it was as if they removed the third floor.
They,
Correct?
no, they turned it off. Basically, as Strom said, if we added compression back online, we can get it back to 2.1 million, 2.1 billion.
If you add the compression back, but the compression that was removed is not being assessed anymore, is it?
It's not.
Okay. One of the questions that both Commissioner Frazier and Commissioner Roman asked you about the system. You know, the consistent testimony has been that this system was built, it traveled west to east, and its original design intent was to move gas to the northeast.
That's
Correct.
correct.
And of course, the market has now shifted and the market's to the south. Now, you've got these interconnects for Columbia, A&R, Trunkline, Tennessee Gas, correct?
Yes.
And this is where I want to get into to Commissioner Romig's question. As I understood what he asked you was originally those interconnects went to the north. And then when the market shifted, some new interconnects were added to move to the south, but they're the same interconnects, aren't they?
They're the same interconnect.
So particularly the eastern end of this system directly feeds to the south, does it not?
It's not directly leading to the south because where those LNGs are back on the very bottom of the boot over there on the bottom left.
Okay, well, I know both Tennessee Gas and A&R run directly to the Henry Hub, do they not?
They do.
I'm not sure about trunk line because I couldn't find a map. Where does the trunk line,
I do
Line
not,
versus-
I
you
do not
know?
have the answer. Nope.
okay, and I know Columbia also runs to the Henry Hub. I mean,
Okay.
that's the interconnect for all, well, for the entire universe of natural gas transactions, is it not?
Do you want to clarify what Henry Hub is?
Do you know what the Henry Hub is?
I do know what the Henry Hub is.
Can you tell us?
It's
what the
basically
Henry
where
Hub
all
is?
these interconnects come in. It's a big hub for buying and selling gas. That's where a lot of the hub is. You have there, you've got Permian Basin's another big one. That's where everything's buying and selling.
So from particularly the eastern end of this pipeline in Franklin and Caldwell Parish, there is a direct interconnect from the Regency system to the Henry Hub, correct? To the south.
Via conduits, yes.
Yes. Well, I mean, again, when you were delivering gas to the northeast, you didn't have pipelines running there, you were interconnected,
Mhm. That's right.
correct? So the fact that the market has moved south doesn't really impact because your interconnects all have access to the south, specifically the interconnects in Caldwell and Franklin. does it not?
That gets more into the pricing. So
No, I'm not talking about pricing. I'm literally talking about the mechanics.
when we were moving things up to the Marcellus Shale, that was back in 8, 9, and 10. We're looking at $8 and $86 an MCF to move it up there. Now we're in the, $3 and $4 range, $2, $3, $4 range. We're moving that stuff down to the south, but we're also competing against all that Marcellus shale gas that's being transported down there. So when we hit the eastern line, it's going to hit that line for one of those interconnects. Let's just take Columbia. Once that hits that interconnect, we're included in with that stuff from the Marcellus. So it's all being flowed down that line in that big interstate down to the LNGs.
So the problem's not that you don't have access to the south. The problem is there's increased competition.
There's increased competition, but the direct access to the south would make that system much more valuable because we could get it to market without having to transport that gas from the west to the east. Would actually be hitting straight, because you end up having to pay basically a toll. So is it better to go in a direct line, or is it better to go this way than down and over? It's just,
But again, if you're specifically looking at Franklin, Caldwell, and then Jackson immediately adjacent,
Mhm.
that end of the pipeline does in fact have direct access to the south, if you're looking at the pipeline assets in those parishes.
it does have access to the south.
Thank you. Now I'll get to my questions. Mr. Grace, I understand you are the managing director for Property Tax Partners, correct?
Correct.
And what is Property Tax Partners' relationship with Regency Intrastate Gas and Energy Transfer?
We are engaged to, basically, we're a full outsourcing. We're filing the returns, preparing the returns, filing the returns, value negotiations, and tax bill processing.
Okay, and to be clear, you're not employed by Regency or Energy Transfer. You're as you put it, an outsourced resource.
That is correct.
Does Property Tax Partners represent any other energy transfer entities in Louisiana?
Yes, we did.
And who are they?
I'm going to object to this question. Mr. Grace does not have authority from Energy Transfer to discuss any other taxpayer in this proceeding other than Riggs.
Ms. Cartwright asserted yesterday that Property Tax Partners, representing other clients in Louisiana, has convinced them to utilize the business enterprise value in assessing property. To it, let me ask a very narrow question. I'll try with simple yes, no, I don't need names. Do you represent any other intrastate, unregulated natural gas pipelines in Louisiana owned by Energy Transfer?
I'm going to restate my objection to the question. Mr. Grace does not have authority from Energy Transfer to discuss any other taxpayer other than Riggs.
Okay, let me try this one more time. Mr. Grace. Setting aside Regency, is there any other intrastate natural gas pipeline located in Louisiana, again, excluding public service property, owned by Energy Transfer, that was assessed by Louisiana assessor using the business enterprise value?
I'm going to restate the objection. Mr. Grace does not have authority from Energy Transfer to address any other taxpayer other than Riggs.
I think I made my point. Yesterday, Ms. McCavanaugh testified via video and explained that she did not interact directly with Louisiana assessors, that was Louisiana, Property Tax Partners' job. Is that a pretty good summary?
Yes, sir. That's correct.
Okay. And since 2014, Property Tax Partners has been representing Regency. I'm just going to call it Regency. Call it Riggs, Interstate Gas. I'm just going to call it Regency so there's no misunderstanding. So your firm has represented Regency in Louisiana since 2014, correct? And since that time, you filed 192 appeals. Maybe not, it's in the record. I want to jump right into your submission to the assessors for Caldwell, Franklin, and Jackson. If you could pull up, and I hope the commissioner will too, go to Exhibit 13. Now, this one just happens to be I believe, Caldwell submission, but as you stated earlier, it's basically just a form cover letter. The cover letters themselves are identical for each of the parishes.
Yes.
Correct? Okay. Okay, first, there are actually two different submissions, there's the March 28th, 2023 cover letter. And then there's a second submission dated April 5th, 2023. And you referenced that a few minutes earlier, correct?
Yes, sir.
And again, can you tell me again what the difference between the March 28th and April 5th submission is?
As stated before, basically, we use the LTC schedule from the prior year was filed with the return.
Okay. Okay, let's start with what you actually provided, what you submitted to the assessors in your cover letter. And you state, and I quote, "We are requesting that functional and or economic obsolescence be considered in the fair market value of the assets. We are providing what we believe to be substantial evidence in support of this request." Okay. What evidence did you submit with this request?
With the return,
Yes.
at that point, with the return, we did not file the appraisal. It was just basically the return and our cover.
Okay. Now, you did subsequently provide the appraisal,
Absolutely,
correct?
yes, sir.
and that's the substantial evidence you're referring to, is
Yes,
it
sir.
not? And again, did you provide any of the data forming the basis of the appraisal of the candidate, taxpayer proffer 1 and taxpayer proffer 2, to the assessors?
That information was not included.
Okay. And you were here earlier when Ms. Cartwright testified about all the information that she went through and that was provided to her in which she used to come up with her opinion of value. And she testified that she received audited by balance sheets for December 31st, 2010 through December 31st, 2017, and internally generated balance sheets for December 31, 2018, 19, 20, 21, and 22. And she also said she had audited income statements for the tax year ending December 31st, 2010 through 2017, and internally generated income statements for the years ending December 31, 2018, 19, 20, 21, and 22. I know Proffer 1 and 2 are part of that, at least for tax years 22 and 23. Did you provide any of that information that Ms. Cartwright testified was provided to her? Did you provide that to the assessors?
The source data was not
Okay.
provided.
Okay, I know that in 2018, you provided the assessors with a copy of an 2017 audited financial statement. Have you provided any financial statements, audited or otherwise, to the assessors at any time since the 2017?
Other than that one, what was provided in our cover letter and what was provided in the Arthur Financial Services document, we did not provide anything further.
And again, the Arthur Financial Services is referencing and was based upon documents that you just testified you didn't provide to the assessors.
Correct.
Okay. Ms. Cartwright also testified that she was provided information about Regency's gross margin assumptions, operating and maintenance expense assumptions, general and administrative expense assumptions, and capital expenditure assumptions through December 31st, 2029. Did you provide any of that information to the assessors?
did you
You're-
say it went through 2029?
Yes, on the assumptions.
They were not provided to the assessors.
You were here yesterday when Mr. Martin Anthony testified, were you not?
I was here.
Okay. I'd asked Mr. Anthony some questions about how energy transfer values assets, and he said, and I quote, "We will take an asset and look at it, and based on the volumes moving through the system, we will look at the contract terms remaining. We will look at actually the producers behind that and see what their capital strength is to maintain any level of activity on those assets and value it." Now, that's not the methodology you used to value these assets for ad valorem taxation purposes, is it?
She used a discounted cash flow and
No.
business enterprise value.
I'm asking what you did. You're the one that submitted that. You did not value these assets for purposes of the returns using the formula that Mr. Anthony provided.
That is correct.
Okay. Now, Mr. Anthony also testified that you could use that methodology to value the assets located in a single parish. Did you hear that testimony?
I'm sorry, can you repeat that, sir?
Mr. Anthony also testified that you could use the methodology he described to value the assets in an individual parish.
You could?
Okay. Mr. Anthony also testified at length about the information he received from from Energy Transfer's Financial Planning and Analysis Group. And to the extent you know, is that the same information that was provided to Ms. Cartwright?
I wouldn't know what Martin would base his information on, sir.
Okay, so in addition to the information, was any information from the Financial Planning and Analysis Group provided to the assessors?
No.
Okay,
Some of that is a timing issue. When we're looking at forecasts, especially on pipeline companies or any company, you do not want that out in the public domain, especially when you're working with assessors. We've had this before where confidential information is supplied and then it ends up being out in the public domain. So when we submit those forecasts and everything, it is submitted basically in the open book letter because that's in August and it delays that time frame.
well, let me ask you this. Your attorney thought that this information was important enough to bring Mr. Anthony in to testify about the information he received. Was there any reason you chose not to provide this information to the assessors?
It was all included. If they would have asked for it, we would have given it to them, but
Okay.
it was not supplied to them.
Okay, you were also here when Mr. Ron Lee testified. Were you not?
I was here.
Okay. Mr. Lee testified at length about the terms of renegotiated contracts. Did you provide the assessors with any of the information that Mr. Lee testified about regarding renegotiated contracts for either 22 or 23?
That was not provided.
And again, Mr. Lee also testified that he was able to verify the information in Ms. Cartwright's appraisal based upon information provided to him by the Financial Planning and Analysis Group, correct?
Correct?
And again, you didn't provide any of that information to the assessors, did you?
It was not provided.
Okay, now you heard Mr. Lee testify to something we referenced just a moment ago, that Commissioner Frazier asked you about, that Regency was operating at 95% of capacity in 2022. Do you believe that a pipeline that is operating at 95% of capacity is suffering from obsolescence?
You can't just take what the volumes are pushing. That's just impossible. It's all about pricing. It's all about how much, what's the cash flow? What's the income of this property? It's not a matter of how much quantity that you're pushing down the system. It's a matter of if the market's shifted, we're not making a lot of money. That's what a willing buyer and seller is going to get to. They're going to look at the financial performance of this property. That's why Arthur Financial came up with a business enterprise value. That's why it was submitted to the jurisdictions, and that's what we're relying on for evaluation. You can't just look at volumes and say, well, we're making this many donuts today, and the value of the business is based solely on the donuts.
So it kind of goes back to Ms. Cartwright's statement about cash flow is king, right?
Correct.
But once again, you did not provide any of the source data. Taxpayer proffer 1 and taxpayer proffer 2 to the assessors.
That is correct.
And you were also here when Mr. Jerry Swatnick testified, were you not?
I was here.
And, you know, just like the previous 2 witnesses, he testified how he was able to review and verify the financial information in Ms. Cartwright's appraisal is correct. And when I asked him how he was able to do that, he said he received information from the Financial Planning and Analysis Group. And this is what's eating at it. Yesterday, Ms. Adolph called 3 separate witnesses, Martin Anthony, Ron Lee, and Jerry Swatnick to testify that they reviewed and verified the accuracy of the financials in Ms. Cartwright's appraisal. And when I asked each of them how they were able to do that, they testified that they received information from the Financial Planning and Analysis Group at Energy Transfer. But you didn't provide that information to the assessors, did you?
As stated before, I did not supply that. Everything
Okay.
was supplied in the appraisal.
I've never seen financials verified by witnesses. Oh, I looked at it and it's good. And if the information that Mr. Lee, Mr. Anthony, and Mr. Swatnick needed to verify Ms. Cartwright numbers, and the information that Ms. Cartwright needed to compile those numbers was never provided to the assessors, how are they supposed to verify that information?
So Energy Transfer, that's part of their process. They will go through and validate those numbers. That's just part of it. When you receive appraisal, you just want to make sure what you received is what you got. So the evidence was not provided to the assessors. We know and we acknowledge that everything is embedded in the appraisal.
Okay. There was a lot of discussion yesterday about the definition of fair market value in Louisiana Revised Statute 4720, I believe it's 2322. The next statute in sequence, 472323, says that fair market value shall be determined in accordance with criteria established by law. And it delegates to this commission the authority to promulgate rules and regulations. Now, there was a lot of talk yesterday about how assessors in other states assess pipelines, but I want to talk about the criteria established by law for valuing pipelines in Louisiana. Are you familiar with Chapter 13?
Yes, sir.
And what does Chapter 13 provide?
Chapter 13 provides the replacement costs and new for specifically pipelines based on a diameter. I know everybody here is familiar. I know y'all saw it probably 2 weeks ago during the rules and procedures. Or rules and regulations, sorry. Basically it breaks it down by diameter of pipe. It also supplies a depreciation schedule to apply to those numbers.
And again, if you're not aware of this, you tell me, but because all the assessors are going to testify to it, are you aware that assessors are required to utilize the procedures set forth in the criteria established by law?
They are required.
Okay. Now, do you know if Chapter 13 says anything about obsolescence?
Not specifically in 13, but there is an obsolescence clause that they must consider functional economic obsolescence.
Is that all it says, or do you know? Look, I've got a copy of Chapter 13. I'm going to hand it to you. And I'll give you a hint, it's in A2.
It says right at the last sentence, functional and or economic obsolescence shall be considered in the analysis of fair market value as substantiated by a taxpayer in writing.
Can you
Consent
read that
to-
last part again? As substantiate?
Substantiated by the taxpayer in writing, consistent with Louisiana rules and reg.
Okay.
47.
So I don't want to hear about what you told anybody, what they may have heard Mr. Anthony or Mr. Lee testified last year. I want to talk about what you provided to the assessors in writing. That was Ms. Cartwright's appraisal for 22 and again for 23, correct?
22, if we go back,
Okay, I know there was the compressor run times, but that really had nothing to do with your evaluation, did it?
it basically paints the whole story. I mean, if you're having compressor run times lower, decreasing quite a bit, open book. 77. Oh. I'm getting there. So during the open, yeah, actually, the police jury and the open book, I'm gonna use 22 as an example. Is that fair?
Well, no.
Are you talking about 23 or 20?
Oh, either year, actually, both years. But I want to be
Okay.
clear. I don't really care what you gave to the Board of Review.
I'm on the
Is
open
that-
book.
Okay,
I'm on page 67
right.
on exhibit 4. So we'll go through the history again. Then we provided the financial history, basically showing everything that was provided. We showed the rig sale, the
Okay,
asset
well,
utilization.
Let's stop there. You didn't provide the actual financials, which again is
We,
taxpayer proper 1 and 2, did you?
we did not provide that. We
Okay.
provided a snippet of that.
Okay, keep going.
Documentation or information regards the rig sale, the asset utilization.
Okay,
Rig-
asset utilization, what capacity did you use? The 1.2 MMBTU per day that Mr. Lee testified to yesterday?
Oh, well, this, we're discussing the, compressor run times.
Okay,
So that was at 42%.
okay. Now compressor runtimes is only relevant in the context of capacity utilization, is it not?
Well, compressor run times, it basically shows we're not running those compressors. We're not pushing a lot of gas. We're not pushing a lot of gas, our revenues, everything is going to be associated to that. So the less you run something, why do you have it on the ground? Why do you have it there in the first place?
Okay, and with the actual obsolescence request you made, was it based upon compressor runtimes?
It was not.
Okay, so this was just kind of surplus information?
It's painting a pretty accurate story of what's happening with this system.
Keep going. What else did you submit to them? I'm trying to get to the appraisal.
Okay, then we gave the financials or the valuations for basically the
And
NOI.
once again, financials,
Huh?
that's the information in taxpayer proper 1 and 2 that you did not provide to the assessors, correct?
correct?
Yeah.
Okay, and then we went in and showed how the LTC developed their LTC guideline and the use map appraisal.
And the use map appraisal.
Yes.
Now, you heard Ms. Cartwright testified yesterday, were you not?
I was here.
And she testified, and I followed up with her and made sure I understood her correctly, that there is no way to double check the numbers for rigs from publicly available sources. Would you agree with that statement?
Correct.
This is back to the comp that's eating. If you didn't provide any of the information, taxpayer proper 1 and taxpayer proper 2, that Ms. Cartwright used to come up with her opinion of value, and that Mr. Anthony, Mr. Lee, and Mr. Swetnick used to verify those numbers, how are the assessors supposed to verify the numbers in Ms. Cartwright's appraisal?
In my position as an ex-assessor, if I was to provide an appraisal, and I did want substantial information behind it, I would request it. We have an open door policy. We've had a communication with most of the assessors. If they needed that information or wanted it, we would definitely provide to them. We'll bring it to them or whatever they need us to do. We're happy to do it. We've had that policy for a while with them. Just nothing was ever requested from us to provide.
I'm going to ask you the question again because you didn't answer it. In the absence of the information, again, taxpayer proper 1 and taxpayer proper 2, that was provided to Ms. Cartwright as the basis of her appraisal, and it was utilized by Mr. Anthony, Mr. Lee, and Mr. Swatnick to verify the values in Ms. Cartwright's appraisal. How were the assessors supposed to verify the numbers in the appraisal?
It would just be the appraisal. Nothing was provided to them.
Okay, no support documentation. Ms. Grace, I know that you personally have been at each of the appeal hearings since 2017. That's tax years 2017, 2018, 2019, 20, and 21. Correct?
Correct.
And in every one of those hearings, you heard the assessor cite the lack of supporting evidence as one of the reasons they rejected the obsolescence request that you made on behalf of Regency. Did you not?
They did not specifically cite what they were missing, what they were not. At the end of the day,
No, I understand that. That's not my question. Well, he's not answering the question. I'm asking you, did you hear them testify that they didn't receive sufficient supporting documentation?
that's what they stated.
That's it. It was not a trick question. Okay, now this was something you and I spoke about at length, and you've heard the testify assessors repeatedly testify that what they need is information specific to their parish. And again, this is something you and I discussed at some length at the tax year 2021 hearing. I asked you whether information in Ms. Cartwright's appraisal was drilled down to the parish level. And Ms. Adolph followed up by asking you if any of the parish assessors had asked you to drill down to that level, would you have been able to do so? And you responded, absolutely. And you went on to say, I can go through each individual parish. I can show the stick by stick. I can show the compressor by compressor. Here's my question. After hearing these assessors testify year after year after year that they need information specific to their parish, and give your testimony you had the ability to provide that, why didn't you?
The difference with this system versus anything is we're trying to appraise the entire system. We have to look at the whole thing. It's like that hotel example I provided earlier. When Ms. Cartwright did her appraisal, it was for the whole system. So to allocate this fairly and equitably across all these parishes, we deemed it was best to use one number going across all these parishes, and everybody receives the same amount of obsolescence.
Mr. Grace, does Mr. Elrod, the assessor of Franklin Parish, assess the entire system?
He does not.
Does Mr. Meredith, the assessor of Caldwell Parish, assess the entire system?
He does not.
Does Mr. Kirkland, the assessor of Jackson Parish, assess the entire system?
He does not.
What do each of those three assessors assess?
Their property within their physical confines of each parish.
When you say their property, I want to be sure, you mean their tangible property?
Tangible property.
Okay, I want to turn back to Exhibit 13. In both the March 24th and April 5th letters, you said the exact same thing. Riggs return values are based on Louisiana Tax Commission schedules RCNLD, replacement cost new less depreciation. We request that economic obsolescence be applied in the RCNLD values based on an appraisal of Riggs business enterprise fair market value as of January 1, 2023. That accurate?
It's accurate.
The letter goes on to state, both letters, their appraisal indicates that Riggs' operating business enterprise value as of January 1, 2023 is $281,004,500. We request economic obsolescence be applied to Riggs schedules to reflect this value. Is that correct?
Yes.
Okay, and well, first let's look at the March 20th letter. Below that, there's a table.
Yes.
Can you explain that table to me?
615. Sure. This is the diameter of pipe for the entire system. If we look at the entire system, we've got 2.76 miles of pipe in various, all the way across the system. And it dictates all the way from each diameter. We kind of broke it down to how much miles that we do have. And using the RCN, this table basically generates what y'all heard the guidelines of LTC. So basically in this case, the LTC came up with about $1.1 billion in RCN. The depreciation, these numbers look a little weird because they have varying degrees of when they built the system out. For example, the leg out to Jackson, Caldwell, and Franklin. Yeah, the 30 was built in 2005, I believe. Fancy dancer map. See how it goes. So in 2005 was the extension, that 30-inch, and then in 9 and 10 was the 42-inch loop. So you're going to see varying degrees. That's why this, if you look up your depreciation tables, you're not going to be able to find that. But what we're doing is we're spreading, we have a detailed list of everything that was out there, and we're basically accumulating everything together to a RCNLD for the entire system of 616 million. And then we divide that by our financials, 281.
Okay, and again, these are, was it says company-wide all parishes. This is the entire system, correct?
Yes, sir.
So this doesn't reflect the property since, well, Exhibit 13 is a Caldwell assessment or Caldwell submission. It doesn't reflect the property in Caldwell Parish, does it?
No, it's in the detail sheets behind there.
Okay, now, if you look at the April 5th letter,
Mhm.
the table's different, is it not?
As discussed before, the
Yep.
RCN is going to be different because we used the wrong schedule.
Okay, so you.
I used the wrong schedule.
Okay, right. So, no, and I'm not faulting you for that. That happens. So the Louisiana Tax Commission schedule valuation increased from 506,048,678, and it increased 110 million to 616,635,504.
I'm sorry, Mr. Arrington, you said the LTC schedule 506, that's just the pipeline value. If you move your finger down just a little bit, that's going to get the compressors. with it.
Yeah, I was looking at the grand total. Oh, you're correct.
Yeah, it's
Okay,
545,
Okay,
835.
let's just use round number, 546 million. It increased to 616 million and change. That's approximately a $70 million increase,
Yes.
correct?
Mhm.
Now, the fair market value in both tables is the same.
It's based off of the fair market value from the use map appraisal. It's not going to change.
That's what I'm getting to. You go through this calculation and you come up with an obsolescence factor. But what you're requesting is that these assessors value the pipeline at operating business enterprise value, correct?
That is correct.
Okay, great. Louisiana Revised Statute 472323 mandates, requires that assessors value property using one of three approaches to value: the cost approach, the income approach, or the market approach. No, look at me. Where does the operating business enterprise approach fit into those three?
It's part of the income approach. It's specifically uses the income approach to derive a value.
Okay, great. What information does an assessor need to do an income approach valuation?
They need the income, they need the balance sheet and projections.
Okay, that's the information in taxpayer Proper 1 and taxpayer Proper 2, correct?
Correct.
And again, information you didn't provide to the assessors, did you?
Correct.
Mr. Grace, there are a lot of discrete components to Rick's pipeline network. There are 2-inch pipelines, 4-inch pipelines, 6-inch, 8-inch, 10-inch, 12-inch, 16-inch, 20, 24-inch, 30-inch, 36-inch, and 42-inch pipelines. Some of these pipelines are transmission lines, others are supply lines, some are loops. And some of these lines have compressors and some do not, correct?
Correct.
Okay, now, obviously, some of these assets are going to generate more income than others. And by the same token, some of those assets are going to generate less income than others. Did you make any effort to differentiate between the functional and geographical differences in Regency's plant, property, and equipment in your obsolescence calculations?
I'm going to object to the form of the question because the foundation is not established.
Okay. Let's establish it. Let's go back to Exhibit 13.
Okay.
There are a list of pipes, correct? By diameters from 2, 4, 6, 8, 10, 12, 16, 20, 24, 30, 36, and 42.
Correct.
Those are the numbers I just read that Ms. Adolph objected to. So you have pipelines with 2-inch, 4-inch, 6-inch, 8-inch, 10-inch, 12-inch, 16-inch, 20-inch, 24-inch, 30-inch, 36-inch, and 42-inch in your system, do you not?
I can clarify my objection.
Okay,
My objection is to the assumption that it is possible to determine values based on individual assets, based on their use. The question that you asked before was based on, or it was predicated on his ability to determine the different values of the different assets.
actually, no, it wasn't. I simply asked him, did he make any effort to differentiate between the functional and geographical differences in Regency's plant, property, and equipment in your obsolescence calculations?
Riggs is operated as a system. It's operated as a whole system. When you value these assets, you value the whole thing. You can't have one without the other.
Okay, let me ask you one more time. Listen very carefully if you're having trouble. Did you
Objection.
make any effort to differentiate between the functional and geographical differences in Regency's plant, property, and equipment in your obsolescence calculations?
No,
Okay. Even though last year you testified that you had the ability to drill down to the parish level, stick by stick and compressor by compressor, you made no effort to address those geographical and functional differences, did you?
when I was referring to stick by stick, basically, this is a summation of the stick by stick. That's what we're doing here. What we want to do is try to find a fair and equitable way to distribute a lot of value and where it's not subjective. It's more of a straight line of we're requesting 54% across the whole system. Valued as a whole system, it would sell as a willing buyer and seller. That when somebody was going to buy this system, they would buy the whole system.
Okay, Mr. Grace, I understand that's what you want to do. What is it? Question I referenced earlier, but tell me again, what's your understanding of what an assessor in Louisiana assesses?
Again, they assess the tangible personal property located within their parish for their respective jurisdictions.
And again, Assessor Elrod, Assessor Meredith, Assessor Jackson, they don't assess the system, do they?
They do not.
And again, so you understand that an assessor job under the Louisiana Constitution is to assess the property located in their parish. Do you not?
That is correct.
And since you were here at the last hearing for tax years 2021, you would have heard each of these three assessors testify that they don't assess, they don't value business enterprises. They only value the property located in their parish. You recall hearing that testimony?
They value based on fair market value. What we have, the Arthur Financial Use Map Appraisal, is a fair market value asset for the entire system.
This will go a little quicker if you answer the questions I ask instead of what you want. So let me ask again. Did you hear each of the assessors testify that they don't value business enterprises? They only value the property located in their parish?
Yes, I did hear
You
that.
did hear that,
Mhm.
okay. Mr. Grace, and I'm gonna be honest, this was the last night and kind of late, but I ran across a definition I want to ask you about. And I'll specifically, is this what you're doing? Or is this what you did? The entire operating property is valued as a unit without functional or geographical division of the whole, considering the income the property produces. The benefit of such an operation is that an appraiser is doing the entire operation, considering all of the parts and not just individual contributions of some of the whole. Using this approach, an appraiser looks at the value of the business itself and not just the hard assets of the company. So, no, that wasn't a question. I was reading that. That's the valuation methodology that you're asking to be utilized for Regency's assessment for tax years 22 and 23, is it not?
Sorry.
Okay. Pardon? Oh. The valuation methodology I described, that's what you're asking to be used for Regency's assessments for tax years 2022 and 2023, is it not?
Correct.
Correct? Well, I saved a bunch of questions. One second. When Ms. McCavanaugh testified by video, she said that Energy Transfer doesn't handle any of its tax matters in-house and contracts all that work out to people, to groups, including property tax partners. Who formulates obsolescence requests for Regency? And more specifically, who makes the decisions and the determinations on the methodology for calculating obsolescence that is submitted to the assessor and decides what information is submitted to the assessors?
Property tax partners reviews those assets. We do review certain, quite a bit with Energy Transfer prior to submissions.
But that's kind of the buck stops with you. Y'all make that determination?
I'm sorry?
The buck stops with you?
Yes,
Property
sir.
tax partners, who makes that determination?
Yes, sir.
Again, how obsolescence is going to be calculated and what you're going to submit to the assessors?
Yes.
Okay. I want to run through, let's take just a minute. Property tax partners for the last 10 years. Testified earlier that you started in 2014. So in 2014, property tax partners requested a 43.5% obsolescence reduction for Regency based upon, and I quote, the runtime on the compressors, and then also the fuel burn relative to how much the fuel burn would be. It's another way to determine how much these compressors are being used. Now, the assessor denied that request. Property tax partners appealed to the tax commission. And at that hearing, your firm's representative at that time, Mike Smith, admitted that property tax partners had not submitted any evidence regarding runtime or burn times to the assessor. Do you recall that?
Objection to the lack of foundation. There's no evidence that Mr. Grace was at that meeting
Well, he can
or
testify.
heard
he
what
doesn't
Mr.
know.
Smith said.
It was over 10 years ago. It sounds logical.
Okay. Are you aware that the tax commission have overruled and rejected your obsolescence request in 2014?
That is correct.
Okay. In 2015,
Wait,
your firm requested a 20% obsolescence reduction based on the recent collapse in oil and gas prices. And when those requests were denied, you filed appeals with the tax commission, again from Caldwell Parish, challenging the assessor's rejection of your obsolescence request. Do you remember the outcome of that appeal?
I have a note here, Mr. Harrington, I apologize, for tax year 2014 is, we took Cane Hill to the LTC and they did lower it from 44 to 40.5. Does that sound right by your number, sir?
No, but
There,
we'll
there was
get that.
one of them. In 14 maybe? No. Okay. No.
Yep, you'll get your stuff. Okay, let's turn something you might remember. Starting in 2016, every single return filed on behalf of Regency was signed by you.
Correct.
Okay. In 2016, you requested a 40% obsolescence reduction based on a claim that the pipeline was being utilized just a bit more than 30% of its capacity, and the compressor stations were operated at an overall average of 21.5% of potential runtime. And once again, you didn't provide any supporting documentation supporting those claims. The assessors rejected your obsolescence request and you filed 21 appeals with the tax commission. Do you recall the outcome of those appeals?
Sir, this is going back to 2016. This is a long time ago.
You don't remember?
I don't have any records of that right here.
Okay. In 2017, you requested a 30% obsolescence reduction based on utilization and an income analysis. But once again, you didn't provide any documentation supporting your utilization analysis. And you also didn't provide any financial statements supporting your income analysis. If you requested obsolescence based upon the fact Well, first off, do you recall the outcome of the 2017?
I do
Appeal.
not.
Okay. Now, this kind of goes to question Commissioner Frazier asked you earlier. If you requested obsolescence based upon the fact that the pipeline was being utilized at just over 30% of capacity in 2016 and 2017, what does the fact that Regency's pipeline was being utilized at 95% of capacity in 2022 tell you?
So at the end, I mean, it's just cash flow. When we look at Arthur Financial Services, we look at her appraisal, look at her cash flows. When we were looking, when you go back into the days of however far back Mr. Edgerton wants to go, those were 10-year firm contracts. So we were generating money even though people weren't pushing gas. I know it's a unusual such situation, but we were getting 30 cents plus the 5% commodity, kind of on average of what we were pushing gas back in 2009 and 2010. We were still receiving money. It was take or pay contracts, meaning they had to pay us money whether they were pushing any gas or any volumes down that line. Then we started looking at when that financial cliff happened in 2020. It was just at that point, that's what we were looking at was the utilization of that property and the utilization of that asset because it wasn't being utilized. And we see later in the years when you start looking at compression that we start removing compressors. That's not a good sign. When we have an impairment study, that's really not a good sign for the financial stability of the company.
Okay, so if it's all about cash flow, what the assessor would need to look at that is the information you have offered is taxpayer proffer 1 and taxpayer proffer 2, correct?
We've answered this question numerous times. Yes.
Yes. And again, you didn't provide that to the assessors. Okay. 2018 and 2019. Property tax partners requested an obsolescence reduction, which you calculated based upon the difference between the statewide value of the property under the tax commission schedules and the estimated operating value the PricewaterhouseCoopers came up with in an impairment analysis. And you calculate a 31.04% reduction in 2018 and a 33.2% obsolescence reduction in 2019. Now you filed 11 appeals from 3 parishes, again, Caldwell, Franklin, and Jackson in 2018, and 67 appeals from 7 parishes in 2019. And once again, in each of those cases, and you were there, you testified, each of the assessors testified that you didn't provide sufficient supporting documentation for your obsolescence request. Now you surely remember this one. In 2018, how did the commission rule?
They denied our appeal.
And what'd you do next?
We filed it subsequently to LTC and then on to court.
Okay. What was the outcome of those court proceedings?
They denied our appeal.
You appealed this all the way to Louisiana Supreme Court with a writ application, did you not?
Correct.
Okay, we've already talked about 21 and 22, and those decisions are currently pending in court, are they not?
Correct.
Okay, that brings us up to the current appeals for tax years 22 and 23. You're asking for 49% obsolescence reduction in 22 and a 54.4% obsolescence reduction in 2023, correct?
Yes, sir.
Now, the one thing that I noticed and I kind of find curious is that the amount of obsolescence you're requesting seems to go up every year. Why is that?
That is a function of the LTC schedules. The LTC has increased its schedules significantly from one year to the next now. That is done during the rules and regulations meetings. Rodney Krett with Pritchard and Abbott does those schedules. We've discussed it with him. Basically, the way those schedules are developed is using a best fit curve is the best way to describe it. So basically it comes up like this. As y'all know, you've heard testimony probably during the rules and regs. But at the end of the day, what we're seeing is more expansion down in those LNGs, down in south. And what we've looked at is those schedule values are coming in for 42-inch at very large numbers, anywhere from, well, north of $10 million a mile. So what that does to the schedule, it raises the schedule, raises the RCN up.
So you're saying the reason the numbers have increased is because the values in the tax commission tax tables have increased?
Well, the numerator increased and our use PAP appraisal has went from 2022 was 295 million. I'm talking without the working capital. And then 2023 moved down to 281. So that delta, if you divide the numerator divided by a bigger denominator, you're just going to get a larger percentage.
So your whole premise has nothing to do with the tax commission's rules and regulations. That's just something you get through what you're actually pitching, correct?
It's a guideline to basically the way we're doing it is spreading that value to all the jurisdictions.
But again, I hate to be redundant, you do realize that the assessors are required by law to follow the rules and regulations, specifically Chapter 13 when valuing pipelines promulgated by this commission, are you not?
Which also stipulates they have to consider functional and economic obsolescence.
What? Read the rest of that sentence. You always leave this off. As substantiated by the taxpayer in writing.
I think a third-party appraisal from a accredited use PAP appraiser is sufficient and substantial information.
Even without providing the supporting data? It's a great question.
At the end of the day, it's a use PAP appraisal. She's held to those standards. The numbers validated and reviewed by Energy Transfer to substantiate their accuracy. That's where I'm at.
And again, the accuracy being from taxpayer proffer 1 and taxpayer proffer 2 that you did not provide to the assessors.
Correct.
Correct? Okay. I did notice one significant difference. In 20 and 21, the appraisals contained a tangible asset valuation, but the 22 and 23 appraisals do not.
That's incorrect. The tangible asset appraisal was only for 2020.
Okay,
2020,
only 20?
2020.
Can you tell me why there was no, since assessors value tangible assets, can you tell me why you didn't provide a tangible asset appraisal in 2022 and 2023?
The business enterprise value captures all those assets. Not only does it capture the value of this system, but it also captures intangibles, land and easements, et cetera. What we're trying to provide the assessors and trying to show them is that there's significant economic obsolescence here. It's well done by her appraisal. It basically stipulates what value she believes it is. And you divide that by your RCNLD, which calculates fair market value but it only calculates the functional part. A divided by B, and here we are.
Before we wrap up, and we're almost there, I want to run the numbers for the 2 years at issue, 22 and 23. In just the 3 parishes you appealed, again, Caldwell, Franklin, and Jackson, you're requesting reduction in fair market value for obsolescence totaling $316,846,140.
You're combining those, Mr. Chairman?
Yeah, I'm sorry. I'm
Yeah.
combining 22 and 23,
Mhm.
all 6 pairs. I mean, subject to check on my math. And when I look at your payment under protest letters, that's taxpayer exhibits 11 and 26, I see that you're requesting refunds totaling $5,680,009. And again, that's just for 2 years in Caldwell and Franklin, Jackson parishes. That sound about right?
Yeah,
I've got the payment under protest letters handy.
okay.
Yep, that sounds about right, or if you want to see it.
It sounds about right.
Okay,
There's gonna be a small variance. There's some land in there that we didn't appeal, just to let you know, we're looking at the big picture on this thing. Go ahead, sir.
and if you add in 20 and 21, those are the other years you requested for evaluation based upon business enterprise value. That's more than $11 million in refunds that you're seeking from these three parishes based on business enterprise value, correct?
I don't have the prior year numbers in front of me. I apologize.
Well, they're in the record. I'll tell you, it's more than $11 million. Okay, earlier, Ms. Cartwright testified that she performed her work on a flat fee basis. Can you tell me how Propertex Partners is compensated? Do you do your work on a flat fee?
We are compensated on a flat fee.
And what about obsolescence request? If you prevail on this, are you gonna receive any
It does
contingency
not,
or kicker?
does not change my compensation whatsoever.
Okay, well then let's kind of wrap it up. So again, for tax years 22 and 23, you're seeking refunds totaling $5.68 million from Caldwell, Franklin, and Jackson parishes. Three of the poorest parishes in this state. And the only supporting documentation that you provided to the assessors was Ms. Cartwright's appraisal, but not the data underlying that. Again, taxpayer proper 1 and taxpayer proper 2.
I'm going to object to the form of the question. There's additional information that was provided that's set forth in each of the cover letters for the renditions and the rope and roll correspondence for each of those years, in addition to the appraisals and in addition to the LTC decision, the exhibits, and the transcript for the 19 through 21 hearing.
Okay, Mr. Grace, are you aware? And spoiler alert, this is from the Regency Intrastate Gas versus Louisiana Tax Commission decision by the Louisiana First Court of Appeal. Are you aware that in Louisiana, it is the party seeking a fair market value reduction for its pipeline property based on obsolescence who has the burden of producing sufficient data and information to substantiate its claim?
That is correct. That's also
Okay.
why we go out to talk to these jurisdictions. We've been working with this for quite some years. This isn't something new that
Oh,
they
that-
haven't seen before.
That actually ties it perfectly to my last question. So after 10 years of these assessors testifying that the lack of supporting information was one of the reasons they rejected the obsolescence request that you and your firm submitted on behalf of Regency, why didn't you provide any of the data supporting Ms. Cartwright's appraisal? Again, taxpayer proper 1 and taxpayer proper 2 to the assessors in 2022 and 2023.
Okay, we've been down here. He has said over and over again, he did not separately provide it because it is included in the appraisals which were provided.
Okay. You may swear again, Angie?
12:30.
It's the last question. You testified, you stated a moment ago that you've been doing this for years. And for 10 years, these assessors have been telling you that they need supporting documentation.
So what we would,
Why didn't you provide it to them? And by the same token, why are you now trying to provide it to the commissioners?
the prior year information, one thing that we would request is we just want to know, what do they want? I mean, you're going to hear this later. Well, they didn't supply it. Well, we've asked them, if you need anything specific, we are happy to provide that to you. That's why the appraisal was done by an independent appraisal. We want to make sure it's on record that she's independent and she's going to provide the best known number for these assets. And that's what we're doing here. We're trying to provide each assessor with the most ammunition they have because they have to go back to their taxpayer, to their taxing districts. I get that. I'm from a small town in Texas. I understand the impact of these dollars. This is a lot, and we understand that. What I'm trying to say is these when we ask for what do you want, it's crickets. We don't receive any requests from any of the assessors. Mr. Elrod, when he reached out in 2023, I was the happiest man alive. Because I want to get this settled. I don't want to come here. And neither does the parishes, and we want to work this out. We even try to work in a phased-in approach and just kind of, gear it down. That was prior. That was a long time ago. But what we're trying to do and what we're trying to substantiate is we've asked and requested, what do you need to do to specifically help us change these values and lower these taxes on this system?
I have a question, Mr. Chairman.
Well, hold on, he answered about 80% of my question, if I can
I
jump.
just want to be clear. I'm hearing two sides. I'm hearing this being said that it hadn't been provided in 10 years. And you're saying that you've asked them what it is that they need, but you've heard crickets. What's the timeline versus the 10 years versus when you're asking them what it is that you need?
Every email correspondence during the open book, it's open. It is, you tell us if you need any additional information, and nothing has ever been provided.
Okay, now here's the one part of the question you didn't answer. You didn't provide taxpayer proffer 1 and taxpayer proffer 2 to the assessors. Why are you now attempting to submit it to the tax commission?
To provide,
What gets submitted to the tax commission is a legal question made by Energy Transfer's attorneys, not by Mr. Grace.
Okay, let me ask a slightly different way. Do you know?
I'm gonna ask a question, because I'm gonna ask it from the tax commission. You didn't turn it in before. You tried to turn it in after the deadline, which we did not allow. Now you're gonna proffer it. Why is the decision now made to turn it in?
Because in the event that this commission rules against us, we will appeal and we will argue to the reviewing court or Board of Tax Appeals, wherever it ends up going, that that information is allowed to be provided and that as a matter of constitutional right, that the legislature could not limit what is allowed to be provided to you when you are determining value. You can limit what the assessors look at, and you can, in your rules, say that for their purposes, if the taxpayer doesn't provide it within the open enroll period, that they may not look at it. But the legislature cannot so limit your authority on review of the correctness of an assessment.
But you think it's important enough that we have that document for us to be able to make a decision? I'm gonna ask the question that we're going round and round on. Why was it not provided to the assessors?
So that's exactly the thing that we're going around with. The document itself was not provided, but all of the information in the document was restated and provided.
No further questions.
Yes, thank you. So at the risk of, of incurring Mr. Roussel's wrath, why did you not provide the financial statements and balance sheets and company projections to the assessors?
they were embedded in the Arthur Financial's use map appraisal.
So there's been a lot of discussion about the capacity of the system. The values that you render and the forms that you submit are based on the diameters of the pipeline and the mileage. They're not based on the capacity of the system. Is that correct?
Yes, ma'am.
And just to be clear, the pipeline that you render is the same pipeline that you have listed in your letters. It's, X number of miles of 16-inch pipe, X number of miles of 24-inch pipe, et cetera. It's the original pipeline system.
Yes,
Again,
ma'am.
not affected by capacity.
Yes, ma'am.
And following up on Mr. Frazier's questions, once you hand the gas off to whether it's A&R or Columbia or Texas Gas or some other company on the eastern side of the system, it's out of Riggs' control. Riggs is no longer making any money off it.
That is correct.
And you just ship the gas. You don't own the gas.
Correct. Well, in most cases.
And I'm sorry, I say you, I mean Riggs.
Yes, ma'am.
Can you go into a little bit more detail about the tolls? You said it's an example of the tolls if a company has to go to, or if a producer has to go through Riggs and another company to get his gas where he wants it to go, that he has to pay an additional fee on that other pipeline?
That is correct. When Martin was testifying earlier, he was basically saying, when we started the system, we were getting paid 30 cents and a 5% commodity to push that gas from west to the east side. Once it hits those big interstates, they transport them straight down. So our basically our toll road ends right where that offloading point happens. And then they renegotiate, anywhere from 9 to 15.
Mr. Eddington asked you some questions about information that Martin Anthony testified to. Would that be information that would be used by the financial planning group to make forecasts?
I'm sorry, can you repeat that?
Mr. Eddington asked you some questions about the information that Martin Anthony testified to yesterday. Is that the sort of information that would be used by the financial planning group to make forecasts?
Yes.
And were those forecasts reflected in the appraisal?
Yes, ma'am.
Mr. Eddington asked you similar questions about Mr. Ryan Lee's testimony about renegotiated contracts. Would that information have been utilized by the financial planning group to make forecasts?
Yes, ma'am.
And were those forecasts reflected in the appraisals?
Yes, ma'am.
And same question for Zeri Swatek.
Yes, ma'am.
And just to be clear, you did provide a copy of the tax commission's decision, the transcript and the exhibits with respect to the 2019, 2020, and 2021 appeals to the assessors.
Yes, ma'am.
If the assessors had asked you, if any of the assessors had asked you, or told you that they needed to verify the financial information or the balance sheets or the forecast, what would you have done?
I would emailed it to them, brought it to them, delivered it to them, whatever they need to communicate.
But you would have provided it had they asked for it.
Yes, ma'am.
So how are you supposed to know what the assessors want when the assessors won't tell you?
We have no idea. We're providing the best known information that we can to the assessors to make a logical decision on obsolescence.
And you were an assessor, right?
Yes, ma'am.
So this information provided to you back then would have been sufficient?
Yes, ma'am.
So one of the things that Mr. Eddington asked you about was whether or not you could provide this information or the values stick by stick. My understanding is that you take the tax commission guidelines for each asset that you render in each parish, and you apply the obsolescence factor to it in the rendition. Is that correct?
Yes, ma'am.
So is that the stick by stick that Mr. Eddington was asking for?
Yes, ma'am.
And so Mr. Eddington went through a series of appeal proceedings where he said that the basis of the decision was that the sufficient information had not been provided to the assessors. Do you learn from each of those, or what do you learn from each of those hearings and each of those presentations with respect to what you should provide the next year?
Nothing is specific. I'm a bullet point guy. I kind of like to see, I need checklist and or a punch list as you finish up a house, et cetera. I like to see that kind of information. If they ask for it, we'll go right down the line and hand it to them.
And so without them asking for anything, how are you figuring out what you should submit?
There's no way for us to identify what they would need. I mean, if it's a different color font or different print, we're even happy to do that. But aside from that, this is what we provided to them.
And based on your experience, this is information that is sufficient to substantiate obsolescence.
Yes, ma'am.
Someone used the expression for the appraisals that they are gold standard. Third-party appraisals are gold standard. Is that something that you said, or was that someone else that testified to that?
That was somebody else.
Do you view the appraisals as gold standard, independent third-party use PAP appraisals as gold standard for determining value?
Based on Patricia Cartwright's work, yes.
Mr. Eddington asked you a question about why not doing a tangible asset appraisal in subsequent years since you did one in 2020. Did the assessors accept the tangible asset values from your tangible asset appraisal?
They did not.
Do you think it would have been worthwhile to go through the expense and effort to do it for subsequent years when they didn't accept it the first time you did it?
No,
Did they submit any information to you or make any information requests to you to indicate what they thought was the shortcoming? Or what additional information would be needed to use a tangible asset appraisal?
no, I received no communication.
Have they ever suggested to you that what they would like to see is a tangible asset appraisal?
They have not mentioned that to me.
If they did, would you undertake the effort and expense to do one?
Yes, ma'am.
With respect to the tax commission guidelines regarding submitting or substantiating obsolescence in writing, do you feel that you have sufficiently substantiated obsolescence in writing to these assessors?
Yes, ma'am.
Thank you. That's the only questions I have.
Couple quick follow-ups. You testified, you keep coming back to it, that at least part of the reason you didn't provide proper taxpayer proper one and taxpayer proper two is that the assessors did not request it, correct?
Correct.
And you testified that had they requested it, you would have provided it.
Correct.
I'm curious, did the tax commission request it?
Not to my recollection. I mean, everything was embedded in the Arthur financial appraisals going all the way back.
Well, it goes back to the question that both Chairman Roussel and I asked, if it's embedded in the report, why have you gone to such great pains to tender and then proffer taxpayer proffer one and taxpayer proffer two?
Of course, you know, Mr. Grace has not gone to any great pains to do the exhibit books. That's handled by the legal folks.
Okay. You testified earlier that you were here when Ms. Cartwright testified yesterday and again this morning, correct?
Correct.
Question actually following up on, she says, if she didn't receive supporting data, she would be concerned that the taxpayer is hiding something. And what really caught my attention was she said if she didn't receive that data, she would refuse the assignment. Since I now know you're a former assessor, can the assessor of Caldwell, Franklin, or Jackson parishes refuse the assignment and simply not value Regency's property located in their parishes?
As an assessor, what I would do is I would receive the appraisal, review the appraisal, go through and ask questions. We're happy to answer them. We've offered to have Patricia on the phone, whatever we need to do to get this resolved.
Mr. Grace, listen to the question. It's not tricky. Can any of these three assessors refuse the assignment?
Oh, they cannot refuse the assignment. They must
They've
certify the
they've
rules.
got to value this property, correct?
Yes, sir.
Thank you. No further questions.
Any questions from the commission?
I have one, because you're probably gonna be the last, I take it, person from that side. I'm just curious, on the, income on these contracts they ran out in 2020, correct?
Yes, sir.
Okay, and so you see their income, and their income takes a dip in 20 and 21, then you see in 22 it goes back up pretty well.
Okay.
Why is that?
In 2022, in 2022 was kind of a little bit of an anomaly of a year. What we ended up having is we're using Henry Hub pricing. 2022 end of year was $6.45. 2021 is $3.89.
So that's $6.45, is that new contract stuff?
I cannot, I'm not the guy for that.
Well, at
but
that, the thing is, though, to me, that's kind of the heart of the matter. Are we gonna continue that income? Because, this appraisal's projected off of projections, hypothetical, of what we're looking at. So when I see the income jump to a certain amount, I take it it's off of new contracts, these pass-through contracts that Mr. Lee was talking about. So is that gonna stay, or them contracts for 1 year and they're done, or?
As
what?
Mr. Lee testified, some of those contracts are 1 to 5 years. They only have one, I believe, for 10 years. But also when we look at that system, you're not only paid a firm, but you're also receiving, what is it, 9 cent and 1 cent. So we do have a commodity pricing component on there. So when we have that extra, when prices go up, producers are gonna open up the valves and say, we're gonna start pushing more gas. So that's what kind of helps with that process. I'm not probably the best person. Martin or Ryan would have been the best person to talk to about that. But I think those revenues are associated with rising gas prices, producers trying to push their gas out of market. And that's just how this it's all market driven.
Okay. But we necessarily can't say that
I
that it's gonna
cannot
go
say.
down from
That's
where
not
it
gonna-
is in 22.
I'm sorry?
But you can't necessarily say that it's gonna go down from here out as far as the income.
Correct. I cannot say that.
Thank
I
you.
will point out that in the appraisal, the projections go out for income, I think, 3 years.
Right, but that's projections. I'm just
that's what-
going off of what,
You're going actuals.
well, I'm going off actual. I'm living in the actual, what's happening and seeing what those numbers actually are. And so, that's why I'm asking that.
Well, as someone who owns property in the Haynesville Shale, I would love to see gas prices go up and somebody start drilling and somebody start shipping.
That's a good question.
The questions from the commission. My accident. I see a pattern of every year you're turning the stuff to the
We're turning, they end up being the same documents because we don't
So,
receive any
yeah,
feedback.
you didn't do, no, as I went there, I got told no, I'm gonna try again next year, and I'm gonna try again next year, and I'm not gonna change the documentation or anything.
We'd love to. If they ask for it, we'd do it.
I kept being told no, I think I tried a different question, or I tried a different approach. That's just me, but I'm simple-minded from Lockport, so we're gonna adjourn till 1:30 for lunch, and then we'll convene back.